10, 9, ignition sequence start, 6.
Hello, and welcome to Rocket Fuel, your daily update of everything that's happening in the Rocket Fuel community. My name is Wack. Today is July 11th, and I've got a quicker episode than yesterday for you. Well, every single episode I've ever recorded was quicker than yesterday's episode, but yeah, let's get started. So the first thing that we have is today there was a community call, and that featured guests VMEX Finance. So Jasper said, I'll be going live with VMEX Finance, who'll be launching some special products on Optimism with Rocket Pool. And afterwards, Maverick and I will cover some exciting news, including the new chainlink feed. So this was recorded earlier today, and the VMEX Finance stuff was really interesting because they're going to be integrating rETH into their pools, and they're one of the first people who will let you use any kind of leverage with your rETH on Optimism. Of course, on Optimism you have a whole bunch of good pools already, like the Beefy Finance one, and there's stuff happening on Balancer there, I think, and you take the stuff to Beefy and they can compound it for you, etc. And they'll be accepting those tokens as deposits as well. So they've got some really interesting stuff that's coming up. It seems like it'll be launching in the beginning of August. They gave information about their token release and all that kind of stuff. I won't get too much into the technicals of it because Jasper did a really good job of covering that during the community call. The second half of the community call was Jasper and Mav talking about the chainlink RPL price feed that we're going to be talking about next in more detail. They also covered other things that are happening in the community. They talked about the launch of Stader yesterday and some how passionate the Rocket Pool community got around some of the issues with that, and how much of a big issue it was yesterday. And Jasper told people to go and listen to my summary of that from yesterday's episode. So if you are curious about that, check out yesterday's episode. It was towards the end of the episode where I talk about Stader and some of the issues that the Rocket Pool community found or thought they found with Stader. I thought they were pretty big red flags. Anyway, it was a really nice community call. It was just over an hour, about an hour and 15 minutes. And it was Jasper's first community call from med school. So I just wanted to take this moment to congratulate Jasper because I'm so proud of him and I know that he's going to absolutely thrive at med school. So congrats, Jasper. Thanks for another great community call. Okay, let's go to this piece of information that was broken by Mark Zeller over here. So Mark Zeller, for those of you who know, works with Aave on the Aave Chan initiative. We covered some of the stuff that he's doing yesterday's episode. He got a little bit of a sneak peek of something, and he was the first person to notice that the Rocket Pool's RPL chainlink price feed has gone live. So he had a screenshot here of Aave version 3 review, and then he says after that he says that the RPL has a chainlink price feed. So this was really huge news that happened overnight, pretty much at 5 a.m. Eastern time, and everyone was pumped, really, really pumped. So people saying this pumpy and that this is great. So there was some really interesting piece of information that came out of this. So here, Harpocrates says, great news. Thank you so much for your work. On the other side, RPL borrowers will be able to participate in Rocket Pool staking without the need to invest in RPL. And then Harpocrates says, definitely will be healthy when this option exists. And then Mark Zeller says, this is a win-win, to be honest. RPL holders can earn a yield without needing to operate pools. And pool operators, candidates can be dealt neutral with RPL volatility. And he says, the only issue would be if there's a big gap between lend and borrow APR. It should hopefully be reasonable and worth it for both sides. And Mark says there'll be a big gap by design, but as long as borrow cost is less than RPL yield when operating a pool, it should be fine. The thing is that I designed the interest curve with RPL yields much higher than now, so it'll probably require an adjustment AIP. How much is it now? So then Harpocrates provided information 8.34. So Mark says, then the parameters should be fine. But then it seems like there was some changes and got the information from some different places, and the APR is actually 8.1 8.10. So I'm not sure if they'll need a new AIP, but if they do, then that will have to be fixed. So here Noshua has some parameters. So the slope 1 is 8.5%, and then slope 2 is 87%. So depending on how much RPL is used up, then the rates will change basically depending on that. And I'll be honest, I don't fully understand exactly how all this works, but basically the more you lend, the more you borrow, the more that is borrowed from the pool available of RPL, the more expensive it will get. But they'll be starting at a point that is a lot lower than the rewards to kind of keep that buffer there. So as they start getting higher, then people can reallocate their RPL and how they want to do that, and potentially exit their mini pools to repay their loans if it gets too expensive to pay for it. So there's some really interesting games that will be played with this, and we'll be talking about that next. This is Mark Seller says, in layman's terms, it's designed to cost 8.5% to borrow when 80% of liquidity is used, so slightly above the yield rate. So that will be changed. And then not sure he explains if it goes from 0 to if nothing is borrowed, to 8.5% is if 80% is borrowed, and then to 87% if 100% is borrowed. So those are like the buffers that they put in place for that. And Mark says it's intended to designed to make sure RPL stays liquid and people can freely deposit and withdraw. Most of the time, 20% of liquidity that is idle. So that's what it's doing. And then Nosho says, so realistically, equilibrium should be around 60 to 70% borrowed if people are using it to run nodes without RPL exposure. And Mark says, if not enough liquidity is available, the borrow rate spikes to attract depositors, incentive people to repay. So unless you're a mega whale that owns 60% of all RPL deposited in Aave, 99% of users can withdraw whenever they want. So this is really nice. So let me give you a little bit of an introduction of what this product that Mark is kind of talking about. So he has this idea that people will come to Aave and they will deposit like 10.4 ETH worth of RPL into Aave, and they will take out a loan against that. Well, they actually be a little bit higher than that, like slightly more amount to kind of like protect against liquidity issues. But in return, they will get a loan that is 8 ETH and 2.4 ETH worth of RPL, something like that. So this is the general idea of what it will be. So basically, then you will have the RPL, the rETH, you will deposit that, and then you have no exposure to RPL. You'll just get the staking rewards from your rETH appreciation over time. And then what you'll do with the 8 ETH and the 2.4 ETH of RPL is you'll bring that to Rocket Pool and you'll start a node with that. So what this means is that you don't actually have exposure to the RPL price in the same way than as if you were buying the token and then you were staking it, right? And then you would be on the line for all the price appreciation or depreciation that happened. Whereas with this thing, what would happen is you would then just repay the RPL that you borrowed, and the interest rate is set to such a way that you won't be getting much of the rewards for the RPL because you'll be using those rewards to pay the interest on your loan. But what you will be getting is outsized ETH rewards because of the loan to value ratio of the ETH part will be higher, so you'll pay less interest on that compared to the rewards that you'll be getting from staking. So the dynamics here will be really interesting to see how they actually work out, and even to know if this will be a product that is needed or wanted by the community. But it's definitely going to be something that a lot of people are looking at, and there's a whole lot of people who have RPL that they're sat on and they're not doing anything with. So for them, depositing into Aave will actually be a really good option because they will earn some rewards on it instead of just pure speculation. And the way that the pool is set up, there'll be that buffer there, so they can, if you are small enough, or if your size is not huge size, then you'll be able to withdraw your RPL at short notice because of the buffer. So this is a really, really cool product, and this product would not be possible without a chainlink price feed, and because you need that for the value, to know what the value is on chain. So let's have a look at this tweet from Jasper as well. He says, attention, RPL now has a chainlink price oracle, let the expansion begin. And then there's a couple of screenshots here of there's a screenshot from the Chainlink website saying asset type Rocket Pool, asset name Rocket Pool, asset type crypto, and it's the RPL USD oracle that they have. And then there's a screenshot from Mark Zeller's work as well. So what we just covered as well. So this will this, like Matt here says very big, and Jasper says it's huge. Tiramisu Bunny, sorry, says, what does this mean? And Jasper says you'll be able to deposit RPL into Maker to earn a yield. You can borrow RPL against the rETH. Other dApps can integrate RPL into their ecosystem very easily. So this might be the beginning of a new wave of RPL integrations into DeFi, which would be really interesting, because at the moment the only use case for RPL is, in the staking environment. If we can get other use cases, it might really be interesting to see how the RPL token kind of works against that. So this is a really, really cool development, and I'm really happy that we have this. It's going to be interesting to see how it comes into practice, so I'll definitely be keeping an eye on that, and I'll be letting all of you know what's going on with that too. Okay, next we have this story that broke on the Rocket Fuel submission thread, because Fornax is awesome, and he wants that ticket and the POAP for submissions. So in the Gravita server, they had an announcement that said that Gravita is upping its mint limits for rETH. So let's have a look at the Gravita website and see what's going on there. As you can see here, that there is the wETH pool, just like wrapped ETH, is 1.33 million. There's a mint cap of 2.5 million, and they have minted 1.33 million of GRI against wETH. Against rETH, it was 4.5 million, I believe, and that was maxed. The mint cap and the minted amount was maxed out, so they've increased that from 4.5 million, I think, to 5.5 million now. So there's another amount that you can tap into. With WST, which is Lido's wrapped ETH, they're stuck at 3.5 million mint cap, and they've only minted 2.65. And BLUSD, which is the chicken bonds from LUSD, that is maxed out at 3.5 million as well. So with Gravita, you can see that the main asset that is in there, and the one that keeps getting maxed out more than any of the others, is rETH. So that's really cool that there's this nice demand for rETH in there. At the moment they're at 22.44 million total collateral in USD, and the total debt that they have is 12.3 million GRI taken out against that. So that's really interesting that this the protocol's working well, and especially for rETH, and there's a nice chunk of demand for it there. But the thing that I really like is that Fornax here was getting involved with Rocket Fuel submissions before anyone else finding out. So that was really nice. And then Patches said, go back to submissions and clean it up there. So he did that. He says, I need the ticket for the raffle that I won't win. So that was really nice. Next, we have a new animation thread from Sleety, and I absolutely love these animation threads. As you all know, Sleety got a grant from the GMC to produce these monthly explainer animations. So this one today says Rocket Pool's rETH, decentralized liquid staking token, and animated thread. And then there's a little gif of rETH. He says rETH is Rocket Pool's liquid staking token, the easiest way to stake your rETH. Simply buy and hold the rETH token and you're earning staking rewards. Choose rETH if you want an LST that is decentralized, insured, censorship resistant, battle tested, Ethereum value aligned. So there's a little gif here, GIF of those values, the Ethereum values. It then says all you need to do is buy and hold rETH, and it grows in value. How you get it doesn't matter. So whether you get it on Uniswap, whether you mint it from the RPL website, the Rocket Pool website, stake.rocketpool.net, it doesn't make a difference. This thread will look at getting rETH via the Rocket Pool website directly, decentralized exchange, or layer 2s. So let's have a look. He says getting it from the website directly. The advantage is that there's no extra fees, no slippage, no liquidity issues, no sandwiches or front running. The best deal for rETH. The disadvantage is that you might pay a little bit more in gas, and if the deposit pool is full, then you will not have an option to buy. However, the deposit pool has not been full since for quite a while actually, so that's not an issue right here at the moment. Next, he says to stake via Rocket Pool's website. There are 8 steps. 1, go to stake.rocketpool.net, click connect wallet, accept the terms, choose your Web3 wallet and unlock. And then step 5 is enter the rETH amount that you'd like to stake, and it'll tell you enter the ETH amount that you'd like to stake, and it'll tell you how much rETH you'll receive below. Other useful info includes the current exchange rate, it tells you that, the average return based on last 7 days, and the current transaction cost based on Ethereum network gas prices. So here there's a note that I really love this particular animation here. It says it's completely normal to receive less rETH than the amount of ETH that you put in. So for example, if you put in 10 ETH, you'll be getting around 9 rETH back. And the reason for that is because rETH has accrued in value against ETH since launch just over a year and a half ago. So Sleety here says the rETH and ETH have a dynamic exchange rate. As the Rocket Pool network earns rewards, 1 rETH will become worth more than 1 ETH, which in turn means 1 ETH will buy you less and less rETH. So there's a really nice GIF here that you can see on the screen that explains exactly how that works. So over the course of 4 years, your 0.9 rETH will be worth 1.18 ETH instead of 1 ETH that you got in the beginning. And then he goes on to say, check if the gas fee is good, click stake, confirm transaction via wallet, and that's it. You'll be staking and earning rewards. He says that your rETH accrues value automatically, and this is just kind of explaining that again. You can unstake at any time, which is simply exchanging your rETH back to ETH. Over time, your rETH will become worth more relative to ETH, and then when you unstake, you will see more ETH back than you put in. And then he says, let's look at an example. So then there's a kind of explaining. He says, if you buy 55 ETHs worth of rETH, today that would give you 51.4 rETH. Over 3 years, because rETH grows in value relative to ETH, your 51.4 rETH would be worth, for example, 62.05 ETH, assuming staking rewards are 4%, which is variable. So it might not be that exact amount, but you'll have earned 7 ETH over the course of 3 years, sorry. And then he says, as ETH grows in value, while the amount of token you hold remains constant, non-rebasing, so simply holding, it doesn't generate taxable events. You'll be taxed on capital gains instead of income, which for a lot of jurisdictions means that you'll be paying less overall. But however, check your own jurisdiction. This is not tax advice. It says this may make rETH a preferable staking token for long-term holding. Do your own research. It's another popular way is to get it via decentralized exchange. For example, Uniswap, Balancer, 1inch, and CowSwap. rETH is also available on layer 2, such as Optimism, Arbitrum, Loopring, and ZK Sync. And this will involve bridging your ETH from mainnet to layer 2, where you can buy rETH on their respective dApps with the benefit of very low fees. Be sure to factor in bridging costs. He says, if you have any more questions about acquiring rETH, be sure to check out the excellent Rocket Pool documentation or speak to anyone in the friendly and helpful Rocket Pool Discord. Happy decentralized staking. So I said this is amazing stuff. Jasper said phenomenal animations. These threads are wonderful because so many people share them with others in the community who might not know some of these things, like in the Ethereum community instead of the Rocket Pool community. So that's wonderful, Sleety, bravo once again. Okay, finally, I'm just going to talk about the GMC stuff a little bit because, of course, as you all know, the grant period is open now. You have until July 15th to get your grants in, so please be aware of that. One of the interesting things that we talked about the other day when we were covering the grants was that Val put in 2 retrospective award applications, one for Ramana for a bot that he made tracking RPL and rETH slippage, and the other was this tool by D McCartney, sorry about that, about Rocket Sweep, which helps you like claim your rewards and see what's outstanding on your node. So he says, hi Ramana, is there anything you would like to add regarding the requested amount or details in general to the rETH slippage application that Val submitted? And then he asked the same of D. McCartney, would you be interested in adding any contracts to Val's retrospective application for Rocket Sweep? He requested $1,000 for the project. Is there any details or info you'd like to add? So Romana said he's very grateful for Val for submitting the application, but something that he'd like to add that wasn't in there was that he's now adding information about RPL slippage as well in liquidity. And he says the amount sounds reasonable to me, but maybe bump it to 1,250 if we include the RPL support too. So here, this was a really interesting comment by D. McCartney. He says, I'll cross-post to the forum if it helps. So he says, I'm flattered and grateful for Val for this write-up. Regarding the amount, $1,000 is great and feels good and way more than the $0 I expected for the work. But then this is really interesting. He says, my hard costs are pretty minimal, so I don't need any help there. But just to be clear, I'm treating this as a handsome appreciation prize, not as a payment for work done. The actual cost of hiring someone to build and maintain a tool like this would be orders of magnitude more, somewhere between $10,000 and $100,000. Again, I'm grateful to get more than zero, and I'm not asking for anything. I mentioned it just to avoid the committee inferring the wrong market rate for prospective projects. I said, please lay out why it would cost so much more, and ask for more yourself, maybe not 100k but more. Val says, Val replied to feels good and way more than the $0 I expected. He says, this is the best way of using retroactive grants for people who didn't have any expectation for the work that was done. So this is really interesting because Valdorf explained, he said the software development work is extremely expensive. The contract rate for a senior software engineer can hit $500 an hour, no problem. I said, I get that, but I mean for him to make a tiny bit of a case for it if he's comfortable doing that. And then D. McCartney here actually really explained it out, and I think this is absolutely wonderful, which is why I'm covering it here. He says basically this: I do contract work regularly and advise a bunch of startups. Depending on whether the design was fully baked, I might estimate 3 to 5 weeks to design, build something like this. So about 160 hours at $300 an hour plus, so about 50,000, and then more for maintenance on top of that. And he says if there's any cost constrained or have other idle developers, I would advise them to consider having a cheaper React developer put together the user interface first, and then have a more experienced ETH developer wire it all up so the data transactions work, and then have an eye towards using the cheaper React developer to do little fixes going forward, or using this project as a way to grow their ETH skills with incremental improvements within a working project. More meta, I'm not inclined to try to retro charge for Rocket Suite version 1. I think of it like I brought a bottle of wine to the party, and it feels tacky to try to charge for it. It says my wine comment shouldn't be read as judgment for people hoping for substantial retroactive awards. Expectations are hard to predict, and I have the elbow room to gifty right now. So then Jasper said, while you yourself may know what full compensation is, important to detail out why you think it's reasonable pay so that the GMC doesn't develop a bias towards underpayment. And this is what I really loved here. Valdorf says we're talking about two different things. The GMC should pay one of the minimum value to the protocol and the cost of the contract, cost to contract this thing out, or the value to the protocol. It says if the cost of the contract the thing out is more than the value to the protocol, the GMC should not pay that. For example, for a retro award, this means paying under the market. For a grant, this means denying it at market rate or saying what we can offer. For a bounty, this means offering under market. He says, I really like Rocket Sweep. I don't think I could argue that it's brought 50k of value to the protocol, though that might be a very realistic cost to contract out the work. So this is the point that Val is making, that even though the work itself might have cost so much, is it something that's bringing this much value to the protocol? And that's probably, the answer is probably no. We wouldn't have paid for a tool like this, but the fact that D. McCartney made the tool is amazing, and he should be rewarded for that in some way. And Jasper said this is a good explanation. I agree with this. Still, it's important for the application add what the cost to contract would be as a reference for value to protocol. And Valdorf says, yep, I think this was a solid context. And Jasper says that was exactly what I was looking for, and I hope DMC posts it on the forum too. So DMC says that in transit now. I'll copy to the forum later. And I said the context was amazing. Thank you for sharing it regardless of whether you ask for more or not. That's invaluable to me as a GMC member to figure out pricing for grants, something we've had issues with. Also, Val, I really loved your comments here. I really hope all the GMC members read this whole exchange. I'll be covering in Rocket Fuel today. And then D. McCartney says, regarding retro reward specifically, I think the committee should think of itself less as conducting a min-max problem against contracting market rates. and instead think of it itself as conducting a gift economy. How might we blend norms of generosity and reciprocity and status in a way that encourages sustainable social contribution? Prospective grants are a little easier to conduct normal bidding, etc., and can borrow from the social trust cultivated by the rest to vet hires. And Patches says, wait, I'm undercharging. Baldov says, maybe New York City senior dev and you've got some niche skills. And he says staff, which is to say, I'm like a mage, I'm skilled with the staff. So that's nice. But then this another little thread popped up here that I think has some really good information on it. So let's have a look here. So this is a thread about discussions of the GMC submitted applications that are going on. One of the things, like people here were asking questions of Polar Punk Labs about the course that they want to set up, and there were a whole lot of questions about Rocket Split that I think is really important to read here, about what value it adds to the protocol, whether this is a good thing or a bad thing, and how it helps Rocket Pool. So there was Val asking questions here, Long Island Blockchain was replying to questions here, Ramana was replying to questions, Val and also Nosha was asking questions. There was some questions of comments Valdov had about Karma HQ Retro. He says, I think they should receive a small award, but the amount sounds quite high to me. That's the amount they're asking for relative to previous expenditures and the value for the community. And then he gives out points here about just how little the dashboard has been used, which this is the kind of feedback that the GMC really wanted in the last round, because paying for dashboards is really difficult, and trying to figure out what value they would add. So definitely, this here, Val is making the point that this doesn't add much value to the community. The tool has things that don't apply to Rocket Pool. The tool is missing info that delegates provided, like their statements and links to their socials, and their creator was responsive when you mentioned some of those things. But there's a lot of stuff missing there. Then Noshwa asked some questions about the Rocket Split contract. Ramana answered some questions. Shifrin was asking for clarification about the Karma HQ Retro, and then Epinef had some points about the Rocket Split as well. So this was really good discussion. So if you have any questions about any of the grants that have been submitted so far or that have covered on Rocket Fuel, definitely go here and ask questions. Either the developers themselves will answer those questions, or maybe other community members where they can answer questions as well. And then finally, we have one new retroactive award that has been submitted. This one was submitted by Patches on behalf of Invis. And this is about Rocket Watch. So in the last round, I think Val and or Patches submitted a request for Rocket Watch. They asked for $40,000, which was approved by the GMC. Now, with this is basically asking for more money for Invis, and Patches here does a really phenomenal case of breaking down all the amazing things that the Rocket Watch bot adds to the Rocket Pool Discord, the Rocket Pool community, how it helps node operators, rETH holders, like a whole bunch of people, like really, really great data of what's going on. And then he says that he would like it to be for Invis to receive another $40,000, and how even at that is quite cheap compared to software developer payment, and also that this is brings it closer to being on par with Rocket Scan, which received $70,000 in the first round. So this is really great and wonderful. So I'll keep an eye on other grants that are coming in, and let you all know what's going on with that. But on that note, I'm going to end today's episode. I hope you all enjoyed it. It was a quick episode-ish, like in terms of number of topics, but I really went deeper into the topics, and there was some really good stuff that was worth covering. So I hope you all enjoyed it, and I will see you all tomorrow. Bye.